Straight off, let's connect with Paul McHale, Asia Head Currency Research Expert with HSBC, joins us live from Hong Kong. Paul, good morning. Thank you for joining us. Paul, Indian rupee yesterday staged a very strong recovery. In fact, Indian rupee yesterday recovered by about 3% plus. That is the biggest single day appreciation in last 15 years. Do you think rupee has a near-term bottom in place now?
Well, I still think that the currency volatility is very, very high for this, for the Indian rupee, and it's not out of the woods just yet. So despite the strong recovery yesterday on the back of the FX swap announced by the Reserve Bank of India, I still have to maintain my caution towards the Indian rupee, especially as we go into a heavy data calendar out of the U.S. next week, which could really drive the dollar to be stronger versus the Indian rupee.
Paul, many experts are of the view that emerging market currencies, including rupee, they are pricing in too much of bad news. And once the Fed tapering will start, emerging market currencies could start strengthening, and it could be a case of sell on rumor and buy on news.
Well, I do think that when the tapering starts, there will be some important clarity in terms of how much and how fast it will unfold. But I do believe that certain currencies in the emerging world are still going to be very, very sensitive to U.S. interest rate dynamics, particularly those with large current account deficits. So obviously the Indian rupee will be very, very sensitive to developments out of the U.S. I do think that over the next couple of weeks, the dollar will probably still maintain a relatively strong footing against most emerging market currencies, including the Indian rupee.
Paul, would urge you to stay with us. We are 40 seconds away from the pre-open rate and about 35 seconds away from the first rate on the currency. The mood is very clear. Globally, things are looking okay. The Nifty has recovered about 6%, approximately 6% from Wednesday's low, and yesterday Nifty appreciated by about 100 points plus. Even though the pace of appreciation in percentage terms looks very big, markets are still short, and our technical experts are of the view that for the short term, which is for the day and for early next week, aligned with long positions, the short selling in the system is excess, and there is no point in trying to go short in this kind of a market. We are in a pullback rally, and the pullback rally could extend itself. The big talking point today, of course, is GDP data, which is expected after market hours today. 63 points up, 59 points up, 59 points up for Nifty Spot, 58 points up now for Nifty Spot, 78 points up for the Sensex. IT stocks, they could be under pressure because rupee has appreciated, but yesterday IT stocks, they started gap down, and then IT stocks recovered in the second half of trade. Let's look at IT stocks. First rates on Infosys are not out, 3104. For TCS, the first rates have also not come out, 1947, interesting number, 1947 for TCS, 100,000 rupees for HCL Tech, and 464 rupees for Bank of Baroda.
Well, or rather the more positive news is some more strength kicking in for the rupee. 66.98 to the dollar, that's where the currency has kick-started the day. Remember, RBI had recently opened the currency swap window for OMCs, so that effect seems to be clearly working in favor of the currency as of now. Paul, but what is your sense? I mean, what according to you is leading to the kind of vicious fall in the rupee right now?
Well, I don't believe it's a specific rupee story. I think it's been very much expressed in other currencies which have a backdrop of a very large current account deficit, whether it's the Indonesian rupiah, also currencies like the Turkish lira. So you're seeing a very high degree of correlation between these type of currencies with some vulnerabilities to what's actually happening externally. I do think liquidity in the rupee is very, very poor, and that's very much reflected by the high volatility that we have been seeing in the currency. I just don't see that type of situation improving, at least over the next couple of weeks. I do believe it's going to still be quite challenging for the exchange rate and trying to manage your FX risk.
Paul, good chatting with you. Really appreciate you taking the time out and speaking with us. 67.20 now on the currency on last check.